Honestly, I don't feel like making this video, but I think I should, especially after the last video I posted. I made $32,000 on one trade on Tesla. And I think I should make this video because we as traders are more prone to losing a lot of money, especially after big green days. And in this video, I'm going to be sharing my worst trading day of 2024. So yeah, on this day, I was down $17,000 at one point of time. And I will start this video by breaking down my game plan because that is very important to understand, because I was so fixated on one setup that made me lose a lot of money. And after that, I just got into fight and flight mode. And that fixation on one setup happened because of my green days, my big green days recently, which leads to overconfidence. As a trader, there's a confidence threshold, the low and high. When you are doing really bad, it comes down under low. That is called underconfidence. You're not able to execute properly. And when you are trading really well, when you have a few big green days, your confidence level goes above that high level, which is called overconfidence. And because of overconfidence, I was just very confident on a setup, overconfident on a setup, fixated on a setup, which made me lose a lot of money before I got into that fight or flight mode. So let's start with the game plan. On this day, I only had two stocks on the game plan, Tesla and Nvidia. Nvidia was actually my main watch and not Tesla. And if you ask me why, because Tesla was gapping up near $400 level after two big green days. If we look at the chart of Tesla, we can see that on Tesla, we had two big green days on Thursday and Friday last week. On Monday, we were gapping up. The pre-market high was already above $400 level. So this day looks like this day. Thursday, we had a push up. Friday, we had a push up. Monday, we closed like a doji. Thursday had a push up. Friday had a push up. Now we are gapping up very extended on the daily chart. Then we most likely close like a doji, and that's what happened. So this price action Thursday, Friday, and Monday is similar to this price action Thursday, Friday, and Monday. It's just like deja vu, right? The history repeated itself. And that's why on Monday, I was like, Tesla can be really messy near $400 level because a lot of people will take like profits. The retail traders will try to chase the move on Monday. It might not happen. But NVDA was pretty straightforward. If you look at NVDA, it had a bit of news. On the daily chart, it's been holding this trend line. We have a major demand zone near 137 to 138 zone right here. So if I draw a zone extending right here. So yeah, it's a major demand zone from 137 to 140. But on this day, we were holding near 138. So I was like, okay, if we reject from 138, 139 for the breakdown under 137, 138 zone, we might see a push towards 135. That is the first profit target. If we get under 135, we break this trend line. We might even see 131.80, 132 zone, which is the monthly low from the last month. So I was like, okay, this looks like a really good setup compared to Tesla. Tesla can be messy. It's very extended on the daily chart. Nvidia, I have a clear zone where to enter, clear zone where to take my profits. And eventually it might even go for $132 level, which can be the ultimate profit target. So the risk to reward on Nvidia trade made a lot more sense to me compared to Tesla. And I even posted that in the Discord group in the J game plan. You guys can see NVDA main watch for a rejection from 140 VWAP zone for 138 breakdown, and Tesla is on the watch for intraday momentum, but I like NVDA more. In the main trading chart, we can see that I already had NVDA on my watch for this week as it held relatively weak last week. That is very important to know because this was Friday last week on NVDA, this day. Right? Friday last week, we closed like a red day. If we look at QQQ, the tech sector ETF, it closed like a strong green day on Friday. This day was a strong green day. So even last week on Friday, I was like, Nvidia is holding weaker than the market. If we get some sort of news or market pulls back, this stock can see a nice push towards the downside, especially after the monthly chart looks like it's stopping right here near $150 level. On the weekly chart, last week it tried to break out, got rejected. So yeah, it looks decent on the weekly chart as well for downside. Not the best setup. We are still holding the uptrend, but yeah, it still looks decent, especially if the weakness of the stock is supported by some sort of news. Now, another thing I want to break down on Tesla is that I have a playbook called exhaustion squeeze. So the last video I posted was a daily range breakout on this day. On this day, after two big green days, followed by a gap up, I have a playbook called exhaustion squeeze. So mainly on this day, like especially when a stock is extended on the daily chart, followed by a gap up near a major level, $400 level is a major zone on this stock before the break of all-time high, which is 414.50, we might sell off. We might see a fake move towards the upside, followed by a rejection from that major level for downside push. That's what happened on this day. So I had this play in the back of my mind, but usually the exhaustion squeezes happen later in the day. So what this means is that we have a fake buying opportunity towards the upside. It grabs the retail traders and then we see a sell off. So this opportunity might work out later in the day. I had that in the back of my mind that maybe later in the day we sell off, we go for a push towards 380 or 385. I'm going to look for exhaustion squeezes later in the morning. But for the opening session, NVDA was my main watch for the breakdown under 138. Now let's talk about my entries and exits on NVDA. I took 2 entries on this stock. Both were losers, big losers comparatively, but based on the size, they were like 10-11% loser. But I sized up on this stock because I was overconfident, as I said. So on this push down, we can see that this is kind of bait for a retail trader. Like it's bait. I want to take it. I have to take it. This was the pre-market low right around this level. Right off the open, we flushed under pre-market low and I froze. I was like, okay, I just wanted to wait it out a few seconds. It never pulled back. Like this pullback towards the upside, there was no pullback. Had we seen a pullback to say 139.2, 139.40, I would have most likely executed on this trade, but no pullback, straight push down. On the next candle, when I saw a pullback to 138.20, 138.30, I'm like, okay, it's going to make a bear flag and push down on the 1 minute chart for a breakdown under this major level that I talked about, this yellow line on the daily chart, 137.82. So I took my entry right here. I took 200 contracts and I exited at the top of this candle, losing approximately 10 to 11%. I'm going to show you guys my TradeZilla. But my investment on this trade, I took 200 contracts, I think 137 puts, was around $40,000. So I lost $4,000 to $4,500 right on the second minute of the market open at 9:31 a.m. Then when it pushed back down, I'm like, okay, this is the pre-market low. It's rejecting from the pre-market low again. Now it's going to go. Now it's going to go. But me in an ideal situation, I will be like, okay, big red candle followed by a big green candle. So in this case, usually it's best to wait for the break or hold under the low of the day at least. Because yes, sellers stepped up, but buyers also stepped up. So buyers are like, this was an aggressive push towards the upside. This was just not like a small green candle. So buyers are holding, like buyers want to hold 138. So the best bet is to wait for a hold under 138. But me, because I was already red for the day and I was so fixated on this setup, I took another entry on this candle, got stopped out again, losing another $4,500 to $4,000. But on NVDA itself, I was down $9,500 within the first 5 minutes of the market open. That kind of messed up my mindset for the rest of the day. I'm going to quickly show you guys the TradeZilla of these 2 trades. And then later on in the video, I will show you all my trades for the day. So the first trade was investment $42,000, fill price 2.13. Overall, I lost 11%, which is not bad. Like if you trade options right off the open on the second minute, if you lose 10 to 11%, which is completely okay. $4,800 loss. Yes, it sounds like a big loss, but again, I sized up on this stock. So my potential profit target was $20,000 to $25,000. Losing $5,000 comes in the ballpark. This is my second trade on NVDA. As I mentioned, my entry right here, exit right here, same size, $43,000 investment approximately. Lost $4,200 and this was at 9:34 a.m. So within the first 5 minutes, I'm down approximately $9,500, approximately say $10,000, just like round it off. Within the first 5 minutes on the setup I was fixated on. And because I was overconfident, why is it not going? Like this should go, this should go. This comes because of overconfidence. In a right mindset, I was like, okay, we had a big green candle, so just wait it out as I explained, but I did not wait it out. Paid for it, down $9,500 on my main game plan for the day. So guys, by this time, it's not too bad. I took 2 losses on NVDA. Everything was planned. It was a playbook setup according to my strategy. I was sizing up in order to make 25K. So losing 5K comes in the ballpark. I lost $10,000, stuck to my game plan, exited at the right time, losing 10%, which is not too bad. But because I was overconfident on NVDA, my mindset was like, why did not it work out? And then I came into my safe zone, right? Trading Tesla is my safe zone. I took 1 trade on Tesla on this candle. I covered that position for $1,000 loss. No big deal, nothing too crazy. 50 contracts, $1,000 loss, completely accepted it. But then comes the revenge trading part, because as soon as I exited NVDA at 9:35, I did not check my P&L, but I had an idea that I'm down around $10,000 for the day. So I took 50 contracts on Tesla again at a fill price of $7, 35K position. I was up approximately eventually $5,000 on this stock by like at the top right here. But as I mentioned, we did not see any continuation push towards the upside. Two big green bars. If we break 400, I want to see a rally towards the upside. Happened, but died down. The tape just died down. So I covered that position for a profit on this candle of $2,000. But this was kind of a revenge trading trade. So as per my game plan, NVDA was a better setup. So if I'm investing $43,000 on NVDA playbook setup, I should not have invested $35,000 on Tesla, which is not a playbook setup. And my whole game plan was to look for exhaustion squeeze for downside. And it gets worse from here. So looking at the 5-minute chart, in the morning, I told you guys that we might see an exhaustion squeeze. We had a huge ass doji right above $400 level after two big green days on the daily chart, followed by a gap up on this day. It satisfies all the criteria for an exhaustion squeeze. But me, because my creative intuition, my gut feeling was not working by this point, I was overconfident and then got into revenge trading mode. I was in fight or flight mode. In that mode, your gut feeling is not working. You need that creative intuition, your gut feeling to make it as a trader. By this point of time, I was just trying to make my losses back. And in the next like 15 minutes from 9:50 a.m. to 10 a.m., 10:05 a.m., I tried taking calls multiple times, like 3 or 4 times, maybe even 5 times, and I lost every single trade. I was like down, down, down. So by this time, like during this like 15-20 minutes, I gave back another $7,000 to $8,000. I lost $7,000 to $8,000 on Tesla. And by this time, around 10 a.m., I was down $17,000. Now, the last mistake of the day I made on this stock is that eventually I realized after being down $17,000, I stopped for a while. I was like, okay, this is an exhaustion squeeze. 2 green days, gap up day satisfies all the criteria for an exhaustion squeeze. We had rejection on the 5-minute chart from 400. This is a good entry. I took 50 contracts. I invested $30,000 on this stock, but I did not hold on to my winner. I was too scared. I was down $17,000. So I'm just trying to make that money back. And I covered that position a bit too early. So exhaustion squeezes, when they happen later in the day, ideally my profit target was 385 and I would have easily made like 25 to 30K on this trade. But I just kept taking my profits a bit too early right here. Like I took 50 contracts, covered 20 right here, 10, 10, 10, 5, something like that. And overall, I only made $6,000 or $7,000 on this trade. So by this time, within the first 40-50 minutes of the market open, I have made all the mistakes in the world. The first mistake was too fixated, too biased on NVDA setup. Second mistake was taking Tesla towards the upside, kind of revenge trading. Third mistake was ignoring the exhaustion squeeze and taking these call setups right here, revenge trading, over trading, whatever. So yeah, biased, revenge trading, over trading. And then I did not hold on to my winner. Finally, I found one good winner, which was as per my game plan. I covered that position a bit too early. Made all the mistakes in the world. Did not hold on to my winner, and eventually by this time I was down $10,000 for the day. So now let's take a look at all my mistakes for the day. NVDA playbook setup, 10%, 11% loser, completely okay. 10% loser, completely okay. Still, I was too fixated on the setup, overconfidence, which is bad for trading. Tesla calls made like $1,000, $1,600, puts $500. I can like again over trading, revenge trading, right? And then as I mentioned, the worst part of the day between 9:56 to 10 a.m. I took 3 trades on Tesla near the VWAP when Tesla was holding right around here from 9:50 to around 10:10. You guys can see, lost $900, $1,600, $6,000, 15% loser, kept sizing up, revenge trading, really bad, right? So by this time, at the lowest, I was down $17,000. This could have been my big winner for the day. Eventually, my game plan worked out. Exhaustion squeezes happened later in the day, but I was too impatient for that. And I only made 25%. What the fuck? This should have been like 100% winner. The premiums went from $6 to a high of $13. That was my profit target. Did not hold on to my winner. Another mistake. Like I made all the mistakes that you can make as a trader. But eventually I was able to catch SPY. And before I explain my SPY trade, you guys can see there's a gap of 20 minutes. And during those 20 minutes, I was able to get my head straight. I was like, okay, I'm down $10,000 for the day. It's not the end of the world. I'm still nicely green for the month. So just accept it. And I was able to catch SPY with very small position sizing. I made $7,000, but the return of investment was 134%. So I'm going to explain the SPY trade and how I was able to size down on this stock. On the daily chart of SPY, we can see that the upside momentum is slowly dying down. It's not even moving. It's moving like 50% of the ATR of SPY. Recently, the volume is dying down. So on the hourly chart, we finally had a sell-off. So we broke down under the prior day's low and we broke down under 607, which is the level I was closely tracking. I don't trade SPY usually, but I was tracking this because if we sell off, Tesla might not go towards the upside. So as options trader, if you trade shares as well, you have to keep a close eye on SPY and QQQ. So once it broke down under 607, I knew that SPY has a gap near under 605 towards 604.32. So I was able to execute on it. My entry, I'm going to show you guys on TradeZilla. So on TradeZilla, if you look at the SPY, and my entry was right around 607 once we broke the low of the day. Yeah, so my entry was right here on this pullback. I entered and I held this position like a boss. My total investment on this SPY trade was $4,800, and I accepted that, okay, I might lose. Worst case scenario, it's the same day expiry contracts. I can lose 50-60% of my investment, and I'm gonna end the day at maybe $12,000 or $13,000 red. I entered at the right time. Game plan was nice. I held on to this trade. My first partial was after like 20 minutes. If I look at my executions, my entry was at 10:33. My first exit was at 10:54. I just held on to this trade. So guys, overall on this day, I was down $3,100 at the end. The max drawdown was $17,000 to $18,000. Total trades 11. The win rate was 36.36%. A weird coincidence. Winner 4s, losers 7. Again, like really bad trading. Commissions were itself like $1,300. So yeah, really bad trading on my end. And I wanted to make this video just so that you know that you're not alone. If you have been trading for a while and if you have days like these, you are not alone. So for example, I have been trading for the past 5 years and I still make these mistakes. These things happen. Even people who have been trading for like 15 years, they make these kind of mistakes. Completely normal. You're not alone. I have been able to make a living from trading even after days like these, because my biggest green days surpass my biggest red days by a huge margin. My biggest green day recently was $35,000, and this red day, my big red day, was nowhere close to being $35,000 red for the day, right? But the thing is, it only takes 10 to 15 minutes. If I go back and look at this, had I taken a break from 9:45 to say like 10 a.m., 15 minutes of break, maybe go for a walk, maybe have a sip, like have a coffee, have a glass of tea or whatever, I would have been able to hold on to my winner on Tesla, making $30,000. This was a 100% winner based on my strategy, exhaustion squeeze, and I would have made another like $7,000 on SPY. So this was a potential $30,000 trade. But because I messed up between 9:45 and 10 a.m., it only takes 15 minutes to mess up your account, to mess up your week, to mess up your month, to mess up your year, right? So it only takes 10 to 15 minutes, especially if you trade options. So now let me know in the comment section below if you have faced days like these, because I'm pretty sure this day will be more relatable to a lot of traders out there compared to my big green days, because my big green days are like, okay, I'm in the zone, I'm trading really well. But on other days, I would say 20 or 30% of the trading days, I do shit like this, right? This is a bit too extreme, maybe 5% of the days in a year. But yeah, another 15-20% of the days I trade like shit, but it's just about risk management on those days. And before you go, if you like this video, give this video a thumbs up, subscribe to my channel for a lot more content on day trading. Follow me on Instagram. I post a lot of good day trading content on Instagram as well. Thank you for watching, and I will see you guys in the next one.